Welcome back everyone to Pete's Investing Updates. We review the weekly progress of a random sample of blue chip stocks from Australia, the US and Europe, and these get updated every weekend. If you want me to review a share price, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button and the like button and the notification bell to get updates as they happen. And first, this week we're going to be reviewing obviously the blue chip shares that we're reviewing with some consistent returns and making sure we follow our strategy. And for those strategies, we find them on our playlists, and here we review our blue chip share price updates on a weekly basis. In this channel, we review some weekly indices in a separate video, and also separate videos. We've got some strategies I recommend you follow, and that includes some simple trading strategies, the average down process, some money management ideas, and what type of blue chip shares to choose from. First, let's get stuck straight into the Commonwealth Bank of Australia. As you can see here for this week, and again, these are all in 15-minute price charts, and each of these charts cover approximately 17-18 months horizon. And in this chart as well, you can see here the top profitability chart. It shows the profitability of the buy and sell strategy, which we follow, versus the buy and hold strategy. This is where we buy the stock, same entry point here, and each of these profitability chart starts with a $100,000 baseline. The buy and hold strategy just holds the stock from when it was bought back here, and it shows you the end result versus the buy and sell strategy. This is our price chart, which you should be familiar with, and then you got here the entry and exit points of the CCI 100 levels. Again, follow our simple trading strategies on that video in a separate playlist to get the in-depth review of how the strategy works. But for the CBA this week, it's had a nice price movement, moving upwards. Closed out on Wednesday last week with a nice little profit of $104 since it was opened back here. And it reopened again on Thursday last week, and it continues to go upwards. So it hasn't closed out yet. So we'll see how that performs in the next week or two. Next, we look at BHP. This has been in a downward trajectory for the last week and a bit, as you can see from the MA200, but it has broken above that MA200 late this week on Friday actually, but yet we've yet to see the MA200 turn upside. So again, keep an eye on that. Our position remains with 40 contracts opened, and again, each of these trades we're processing, we're trading $2,000 lots. One thing I want to point out as well while we're here, just be mindful that, as you can see here, the strategy works quite well. This happened start of 2020 when COVID hit. We entered the trade at the peak of the COVID crisis back here, and the price declined, but we entered down here again. Our second level of trades were entered, and then we entered, and it closed out here with a profit. So that's just a quick summary of the effectiveness of this strategy, how it works. Most of these other trades were single entry and exit trades, with the exception of that one there during the COVID drop in price. And there was another double entry here, and again it closed out with a profit just down here with a nice little gain. Next we look at Volkswagen. This had a nice appreciation in price this week, although we're still in the trade, as you can see here, after being held for a number of weeks after our entry back here. We entered one set level of contracts, $2,000 worth. The price declined. We entered another level of contracts here, and the price then continued to decline, then stabilize above the MA200, and that's where we are today. So still in an open position, and we haven't closed out yet. We'll keep an eye on that and see how much we gain at the end of the trade. Then we look at Telefonica. Closed out a nice little gain here for the last week and a half. Opened up there, then it closed out there, but then it reopened late last week, and the price has declined and broken down below the MA200 following this downward trajectory. So just keep an eye on that. No panic stations, as proven before. The strategy works in a downward market and then recovers quite nicely when the price does recover. JPMorgan. Price opened late last week and remained flat for the whole week. hovering below this key resistance line, and also bouncing around on this MA200. It has broken up above the MA200 here, so hopefully it continues upward trajectory. We'll just see how it goes. No more entries, no more additional contracts entered in this particular trade. We're not far down we hasn't depreciated enough to enter more trades at this point, so we're going to hold that position. Next we'll look at Johnson & Johnson. Very similar to JPMorgan, prices fluctuated along this MA200 and also this key resistance line. So I'll just keep an eye on that. Again, only the one set of contracts entered back here a week and a half ago. Lastly, Caterpillar. This has been in a slight decline in the last week and a bit, and it's broken above our MA200 and approaching this key resistance line. So we needed to break above that resistance line to see some more positive growth. Although the position, one level of contracts has been entered, $2,000 worth back here a week and a half ago, and it's been going sideways ever since. So again, signs so far so good. It's broken above the MA200, which is a good sign. Finally, let's review our returns table. And this shows the dividend yield for each of our blue chip stocks, the ex-dividend dates when they're due or when they were last paid, the profitability for the buy and sell strategy versus the buy and hold strategy. And again, these are in Australian dollars, in euro and in US dollars. So this final number is a combination of those currencies, so we'll just call it dollars and just in summary. So 7,800 for the buy and sell strategy versus 7,300. You can see there the returns on each of those with the maximum drawdown accordingly for each of those trades. As you can see here, it's traded on average of about 17 months. So on a per monthly revenue basis, that 7,800 works out to be about $480 per month. So again, please click on the subscribe button, the like button, and also the notification bell to get any updates. And also don't forget to review the playlists and the strategies we follow to get a better understanding of how these strategies work. See you again in next week's review, and have a good trading week. Bye-bye.